Don't hold XRP in 2026 until you see this, because if you hold XRP right now, there is one uncomfortable truth that people avoid. And it is not about price targets, hype cycles, or even moon predictions. It is all about assumptions. Because whether XRP dominates 2026, disappoints, or simply surprises everyone, the biggest risk for most holders is not being wrong about the future. It is being confident for the wrong reasons. And that is what this video is really about. Over the past few weeks, I have been going back through the narratives around XRP, the data that people are quoting, the arguments that people keep repeating, and the conclusions that many holders already feel locked into. Now, what stood out was not that people were bullish or bearish. It was how rarely anyone stopped to ask why they believe what they believe in the first place. Some people are convinced that XRP is being underestimated. Others think that the market has already priced everything in, and a large group are holding simply because they have held for so long that changing their view now feels uncomfortable. So if you are watching this, chances are you are already an XRP owner or at least emotionally invested in how 2026 plays out. That means that this is not about convincing you to buy, to sell, or to hold. This is actually all about pressure testing the logic behind your position before the market does it for you. Because 2026 is not just another year on the chart. It is a point where regulation, utility, liquidity, competition, and market structure starts colliding in ways that will reward clarity and punish lazy thinking. And most investors, they do not lose money because they picked the wrong asset. They lose because they held the right asset for the wrong reasons and ignored the signals that mattered the most. So in this video, I'm going to walk you through 20 specific reasons that XRP could matter more than people expect as we move towards 2026. Some of these will strengthen your conviction. Others might make you uncomfortable. A few might directly challenge things that you have heard repeated as fact. That discomfort is intentional because the goal here is not to tell you what to think. It is actually to make sure that whatever decision you make about XRP over the next cycle is based on understanding, not on hope, not on fear, and not crowd narratives. By the end of this today, whether you feel more confident holding, more cautious, or simply clearer about the risks, you will not be guessing anymore. You will know exactly why you believe what you believe. So before you lock yourself into a decision for 2026, let's slow down and start at the foundation. You see, here's the foundation that most people skip. Your brain wants a simple story. It wants a villain and it wants a hero. It wants XRP is suppressed or XRP is dead. It wants certainty. But markets punish certainty when it's not earned. So I'm going to ask you a series of questions that sound simple, but is actually surprisingly hard to answer honestly. If someone challenged you right now and said, give me your top 3 reasons that XRP will outperform everything in 2026, could you do it without repeating a slogan? Not a meme, not utility, not ISO, not banks. I mean real reasons with a chain of logic that you can actually defend. If you can, good on you. This video will sharpen that logic. But if you can't, even better, because that means that you're about to replace emotional conviction with informed conviction, and that is rare in this space. Now, I want to set one rule before we go any further here. We're not doing price targets in this video. I'm not going to throw out a number and try to make you feel something about it. That's cheap. Instead, I'm going to look at the conditions, the catalysts, access, liquidity, regulation, infrastructure, adoption signals, and we're going to ask a simple question again and again. Does this make XRP more investable in 2026 than it did maybe back in 2024? Because if the answer is yes across enough areas, well, price becomes a consequence, not a hope. All right, let's start with the reason that mattered more than any chart pattern for years. The one thing that hung over XRP like a storm cloud. Reason 1, the SEC case is officially resolved. You see, for years, XRP didn't trade like a normal asset. It traded like a legal argument. Every headline, every rumor, every court date moved sentiment. Institutions, they stayed away. Platforms hesitated. And people treated XRP like it had a question mark stapled to it. You see, in August of 2025, that question mark got even smaller. Ripple and the SEC reached a definitive conclusion, right? Ripple agreed to a $125 million fine, and both parties withdrew their appeals. That's not just a news event. That is a psychological shift. Because markets, they hate uncertainty. They hate it more than they actually hate bad news. So, a clear loss can actually be priced in. A clear win can also be priced in. But a never ending maybe, well, that scares money away. And serious money is cowardly around uncertainty. So ask yourself this: how many people avoided XRP purely because they didn't want to deal with the risks that the SEC case could drag on forever? Now ask the next question: what happens when that reason disappears? You see, this is where the story gets more interesting because once that weight started lifting, the next domino fell pretty fast. Reason number two: spot XRP ETFs have launched and started gaining some significant traction. Now, this is one of those moments that sounds boring until you actually understand what it really changes. You see, a spot ETF is basically a bridge, isn't it, right? It takes an asset that's hard for a traditional investors to access and it makes it normal. It turns something that required an exchange account, KYC, wallet management, and a whole bunch of friction into a well ticker symbol. It makes buying XRP feel like buying any other financial product. Now that matters because most money, let's face it, is kind of lazy. Not dumb, just lazy. Now it will not just jump through all of those hoops for you. Now spot XRP ETFs. They went live in November of 2025 with Canary Capital's product debuting on the 13th of November, and then came the inflows. By the 3rd of December, total inflows reportedly surpassed $800 million, and then the big psychological milestone crossing $1 billion in net inflows on the 16th of December. Again, I'm not telling you that ETFs equal pump, right? I'm not telling you that ETF equals access. That's exactly what I'm saying, right? Because ETFs do equal access for institutions. And access, it changes demand profiles. It changes who can buy, how easily they can buy, and how much they can allocate without explaining themselves to compliance teams. And speaking of access, here is reason number three. And this one is bigger than most people realize. Reason three is that Vanguard allows XRP ETF trading. You see, Vanguard is not the type of company that does things just for fun. They built their brand on caution. So when Vanguard reversed their stance in early December 2025 and opened access to crypto ETFs, they included XRP-focused products to more than 50 million clients. That's not just more buyers, that is a signal. It is a signal that the conversation around crypto exposure is shifting from should we allow this to how do we manage this? Now, if you're an XRP holder like me, you should probably care about that shift because it changes the identity of the average buyer. More ETFs plus more brokerage access means more exposure for people who would never download an exchange application on their phone in their entire lifetime. Now, let's get to that part that separates XRP from a simple narrative about institutions buying a ticker. Because if XRP's whole thesis was just Wall Street wants in, well, that would be pretty fragile. What you want is the second engine, utility and integration. And that brings us to reason four: a partnership linking XRP's ledger with MasterCard's ecosystem. You see, in November 2025, Ripple announced a collaboration involving MasterCard, WebBank, and Gemini. The idea was to enable settlement for Gemini credit card transactions using Ripple's RLUSD stablecoin on the XRP ledger. Now I can hear someone saying that's RLUSD. That's not XRP. Yes, and that's exactly why this matters, because an ecosystem grows through rails. If XRP ledger becomes a serious settlement rail, then it increases activity, liquidity, and relevance around the network. And networks with relevance attract more integrations. Integrations attract more usage, and usage attracts more liquidity, and liquidity, that is the oxygen of market structure. So the real question is not, does every transaction use XRP? No. The real question is the XRP ledger becoming a place where money moves? Because when money moves, opportunities appear. And if Ripple's stablecoin is moving on the XRPPL, it's bridging attention and infrastructure to the chain, which leads me directly to reason five. You see, reason five is all about RLUSD and how it surpasses $1 billion in market cap. You see, Ripple's stablecoin RLUSD reportedly crossed the $1 billion threshold in early November 2025 and approached around $1.3 billion in early December. Now, that's not a small side project, is it? That is a meaningful liquidity pool. See, stablecoins are not that exciting. They're not meant to be either. They are just plumbing. But plumbing is what turns a crypto network from a speculative playground into a financial highway. And if you've been around long enough, then you know the networks that win are usually the ones that become useful, not the ones that scream the loudest on social media. Now, I want to open a loop here because this is where most people probably will make a mistake. They think utility is a magic spell, right? They say XRP has utility, therefore the price goes up. But that's not really how the market works. Utility matters when it creates consistent demand, when it builds liquidity, and when it reduces friction for large flows. So, as we go through the next reasons, I want you to keep asking one question. Does this development increase the probability that large flows can use Ripple's infrastructure smoothly? If yes, well, you're stacking the odds. Now, we get into the part of the story that most XRP holders don't talk enough about, which is Ripple's behavior as a company in 2025. Because Ripple hasn't been sitting still. Ripple has been buying pieces of the financial system. Reason 6, Ripple acquired G Treasury. On the 16th of October, Ripple completed a $1 billion acquisition of a company called G Treasury. Now, that's not a casual purchase. That is a strategic move into corporate treasury management. So let's think about what treasury management is and how big companies manage their cash, payments, liquidity, and of course the risk, because it's where decisions get made about what rails to use, what assets to hold, and of course how to settle. So when Ripple gets closer to that layer, they're not just selling a token here. They are embedding into how companies operate. And that's the difference between a crypto project and a financial infrastructure. Reason number 7, Ripple rebrands Hidden Road into Ripple Prime and it gets access to the DTCC netting services. You see, Hidden Road was rebranded as Ripple Prime after its acquisition in earlier 2025. And to the kind of the key piece that's mentioned in this is the access to the DTCC netting service. You see, most people, they don't appreciate how massive DTCC is in traditional finance. It's part of the settlement backbone. So if Ripple Prime is securing access there, it's Ripple moving closer to the heart of institutional settlement. And again, the theme here is not the XRP price, it's actually the XRP relevance. Now, if Ripple can offer institutional grade services that connect to existing financial networks, it actually lowers resistance. It makes adoption easier. It makes pilots much easier. It makes big money more willing to test the rails. And while Ripple was doing all of that, something else happened that deserves its own spotlight too. You see, Reason 8 is all about Evernor accumulation. Ripple-backed Evernor accumulated around 388 million XRP by late October 2025, roughly $1 billion in value at the time. The key detail is that it was tied to open market activity around SPAC merger and an IPO plan. Now, I don't want you to hear this as whales buy their for moon. That is not really the point. The point is that someone with approximately proximity to Ripple decided holding a massive chunk of XRP was kind of worth it. Now, that implies a belief that XRP has strategic value, not just speculative value. And it raises a question. If someone is comfortable accumulating that much XRP, what are they preparing for? Now, maybe it is nothing, maybe it's just diversification, maybe it is strategic positioning, but when you see a move like that, it's a data point. And when you combine it with exchange-traded funds, regulatory clarity, and infrastructure expansion, it starts to look a little less random. Also, there is a simple market mechanics angle too. If meaningful supply is absorbed and demand increases later, it can tighten up the markets. Now, I'm not claiming a supply shock is a guarantee. I'm saying that the conditions for tighter supply become a lot more plausible. Now, let's zoom out again because some of these 20 reasons are not XRP specific. They're actually macro, and macro is what decides whether risk assets get oxygen in 2026. Reason number 9, the yen carry trade unwind narrative. There has been a discussion around a potential reversal of the Japanese yen carry trade estimated to be around $4.5 trillion due to the Bank of Japan rate hikes. Now, some they are believing such an unwinding could increase demand for XRP through corridors like SBI Remit, although this remains unconfirmed. Let me kind of translate this into plain logic then. When rates shift, big capital tends to move. When big capital moves, friction matters. Now, if there are corridors where Ripple infrastructure is already well positioned, it becomes part of the conversation. Now, is this a guaranteed XRP catalyst? No. Is it a plausible tailwind that could matter in a year where multiple tailwinds are already stacking? Yes. And in markets, stacked tailwinds are what you kind of want. That brings us to reason 10. The Federal Reserve rate cuts. You see, the Fed implemented 3/4 point cut rate cuts in 2025. The most recent one at the point of this recording was on the 10th of December, 2025, lowering the federal fund rate to a range of 3.5 to 3.75. You don't need to be a macro expert to understand the core idea here. Lower rates tend to make risk assets more attractive. They also tend to make liquidity conditions easier. Now, the important thing is timing because markets often anticipate, then react, and then overshoot. So if the rate environment is easing into 2026, it supports the risk and environment that tends to lift crypto narratives. Reason number 11, global M2 money supply expansion. You see global M2 climbing to record levels between 108 trillion and 111 trillion in 2025, right? Crypto markets, they lag that growth. But that lag does matter because when liquidity expands, assets often respond at different times. If crypto lags, it can become the catch-up trade when sentiment finally shifts. Again, not a guarantee, but it sets a backdrop for where capital has more room to move into speculative and growth assets. Reason 12, then increased overnight repo liquidity. The Fed conducted sizable overnight repo operations, including one of the largest injections of $29.4 billion on the 31st of October 2025. This is one of those things that most retail investors ignore, but liquidity is the hidden engine of the markets. So when liquidity is tight, everything feels heavy, right? And when liquidity eases, narratives get louder. And that brings us to reason 13. Liquidity support without formal quantitative easing. See, without, or at least even without announcing a full QE program, reserve management purchases and repo activity can inject liquidity in ways that feel very similar to early stage easing cycles. So if you're wondering why 2026 could be very different from 2025, part of it is the backdrop could actually be shifting from tight and cautious to looser and more willing. So, reason 14, proposed tariff dividend stimulus. You see, late 2025 had discussions around a proposed stimulus plan involving 1,000 to 2,000 tariff-funded dividends. Not implemented, but it boosted investor expectations, right? And here's why that really matters, even if it never really happens. Markets trade expectations, not just the reality. So if people believe that stimulus is possible, they position themselves for it. And if stimulus actually happens, well, some of that money flows into risk assets, including crypto. Now we might get into the political and regulatory angles, and you might also be thinking, I hate politics. Fair enough. But your portfolio doesn't really care what you hate. It simply cares about what moves policy. And reason 15 is a pro-C crypto stance from the Trump administration. President Donald Trump hosted a crypto-focused summit in March of 2025, confirming a supportive policy environment. Now, this stance, it contributed to SEC pullbacks and the passage of the Genius Act in July. Now, whether you like that or not, the market reads it as a reduced hostility, and reduced hostility is reduced friction. Reason 16, then, is the progress of the Clarity Act. See, the House passed the Clarity Act on the 17th of July, 2025. Senate deliberation stalled and shifted it into 2026. Now, you might be thinking, why does this matter for XRP holders? Well, it's because regulatory clarity is what institutions need to allocate more confidently. If 2026 continues to trend towards clearer rules, it supports more adoption, more products, and more integration. Reason 17, ongoing scrutiny around Tether. Concerns persisted around Tether, including reserve questions and an S&P downgrade. Of course, no collapse has occurred, but new regulations increased oversight. Now, this matters because stablecoin trust is system-wide, isn't it, right? If the stablecoin market becomes more regulated and transparent, it can attract larger players who previously stayed out. And if Ripple's stablecoin RLUSD is positioned as a more compliant option in certain contexts, well, that could actually be quite an advantage. Reason 18, completion of the ISO 20022 migration. Swift finally, at least finalized its ISO 20022 migration on the 22nd of November, 2025. Now, many community figures had argued about XRP compliance, right? So let's be rather careful here. ISO 20022 has become a bit of a buzzword. Some people treat it like a bit of a prophecy. Don't do that. The real point is that messaging standards and payment modernization are actually happening. Legacy systems are now upgrading, and upgrades create windows where new rails can be tested, integrated, and adopted. So instead of ISO makes XRP explode, think modernization creates opportunities. Reason number 19, Ripple moves towards becoming a bank. You see, on the 12th of December 2025, Ripple gained conditional approval from the OC for a national trust bank charter focused on custody and settlement services. Now, that is a pretty huge credibility signal, isn't it? A trust bank charter is not a meme. It's not a Twitter thread. It's a real step into regulated financial territory. It suggests that Ripple wants to sit inside the system. It's not just talk about disrupting it from the outside. And for institutions, that really does matter, right? Because they want counterparties that look and behave like regulated entities. And finally, reason 20, pre-allocation theory. You see, speculation suggested that Ripple allocated some escrowed XRP to financial institutions. Again, this is unconfirmed. Now, I'm including this for one reason only, because it shows you where narratives can go in 2026. If even a hint of institutional allocation becomes real, it could become a major storyline. Now, if it stays unconfirmed, it remains just noise, but you should be aware of it nonetheless. But don't marry it. Now, we've walked through all 20 reasons, but I'm not going to leave you with just a list, because lists don't change behavior, right? Understanding does. So here's the reframe, the part that ties everything together. The strongest XRP thesis for 2026 is not a single catalyst. It's actually a convergence. It's the legal clarity plus market access plus liquidity rails plus institutional integration plus a shifting macro backdrop, right? Any one of those things alone is not simply enough to make XRP the best investment of 2026. But when enough of those line up at the same time, it changes the probabilities. Now, let me ask you another question, the one most holders probably avoid because it's kind of uncomfortable. If XRP underperforms in 2026, what would the reason be? Would it be because the tech failed, or because the market narrative never caught up, or because competition stole the attention, or because adoption didn't scale fast enough, or maybe because liquidity conditions tightened again? Now, if you cannot answer that, then your conviction is kind of fragile, and that is why I want you to treat this video a bit like a stress test. Not for XRP, but for your reasons. Now, this might shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video is for entertainment and educational purposes only, okay? Now let's talk about the part that matters just as much as the reasons themselves, how most XRP investors get this wrong. They get it wrong in three predictable ways. First, they anchor their identity to a position, right? You've seen this, right? Someone holds XRP and it becomes who they are. It's not I own XRP, it's I am an XRP person. Now, the moment that you do that, you stop thinking, you start defending. Second, they confuse time with correctness, right? They think I've held for years, so it must be right. But holding a long time is not proof of anything. It's just time passing. Third, they outsource their thinking to the loudest narrative. They follow accounts that tell them what they want to hear. They avoid anything that feels like doubt. And that is how you end up confident for all of the wrong reasons. So what does right reasons look like? Kind of looks like this. You can explain XRP's upside in terms of access, regulation, liquidity, and integration. You can explain XRP's downside in terms of adoption timelines, competition, macro shifts, and narrative risk. You know what would change your mind? You're not holding because of hope. You're holding because of a thesis. Now, let's make this practical, because you might be thinking, okay, what do I do with all of this information? Here's the simplest way that I know to kind of turn information into clarity. Pick 5 of the 20 reasons that matter most to you personally. Not the ones that sound the coolest, but the ones that actually move your conviction. Then ask yourself 2 questions for each of them. What would make this reason stronger, and what would make this reason weaker? For example, let's take ETFs. Stronger would be that the inflows keep rising over time. More products launch, more platforms allow access. For the weaker side, it would be that inflows slow. Products lose traction, attention moves elsewhere. For the OC charter, well, stronger would be that Ripple expands regulated services, institutional partnerships grow, custody and settlement usage increases. Weaker would be that progress stalls, regulatory hurdles appear, adoption is slower than maybe we expected. For RLUSD, stronger would be that market cap grows, usage expands, more integrations appear on the XRP ledger, liquidity would deepen. Weaker would be that adoption stores, competition dominates, and usage remains kind of niche. And this is how you stop being an emotional holder and you start being an informed participant. Now, here's a quick practical thing because it matters for real life. If you are planning to be active in the market in 2026, you're going to want your setup ready, not in some middle of the chaos that's going to be 2026, not when every exchange is overloaded and you're trying to verify your identity while the market is moving. No, that is why I work with multiple exchanges and I test them ahead of time, right? And I want to mention something very specific just for you guys because it directly is relevant to the XRP holders. I have partnered up with Kraken to reward people who sign up and trade $100 worth of any crypto, excluding stablecoins, and they will be rewarded with $25 of XRP. Now, it is a limited time offer and it can be a great way to accumulate more XRP, but it's also a great way to get another exchange account set up and tested ahead of a bullish market. The key part is that you do need to trade $100 of any non-staple coin crypto, and you do have 30 days to complete that within opening your account, right? All the details are linked in the description, all the terms and conditions, and of course it is an affiliate link that is through, or at least the link in the description is an affiliate link, which supports the channel here and does not cost you anything extra. The terms and conditions are quite clear though. Not every jurisdiction around the world is going to be eligible for this. So do check out the terms and conditions before actually going ahead and signing up. But just to be clear, I'm not telling you to go and trade anything, right? I'm just telling you to be prepared. There is a big difference there. Preparation is kind of boring until it saves you. Now, another thing that helps you avoid all the lazy thinking is actually being around people who can challenge you without turning it into a complete drama. And that is why I keep pointing people to our free educational Discord. It's not about the hype. It's about staying sharp. It's about comparing notes and catching the details that most people simply miss. If you want that, well, it's also in the description down below. And if you want a structured way to actually build your skills beyond all the headlines, you can check out the Cheeky School as well over at cheekyschool.com. And it exists exactly for that reason. There's a 50% off code in the description, and it's built for people who want to stop guessing and start understanding. Now let's go ahead and close the loop from the very beginning. The uncomfortable truth wasn't about price targets, it was all about assumptions. So here's the question that I want you to at least sit with after this video. If 2026 is the year where XRP either proves itself or disappoints, what exactly are you betting on? Are you betting on access through exchange-traded funds and major platforms? Are you betting on a friendlier regulatory environment? Are you betting on Ripple's strategy to become embedded in institutional finance? Maybe you're betting on the stablecoin growth and the XRP ledger settlement activity. Are you betting on the macro liquidity easing that lifts all the risk assets? Because if you can name your bet, at least then you can manage your bet. If you can't name your bet, then you're not investing at all. You're simply hoping. And I don't say that to insult you. I say that because hope feels good until it doesn't. So don't hold XRP into 2026 until you see this video, right? Because this guarantees absolutely nothing, right? Because this forces you to be honest about why, you're in the position in the first place. And if you do that, then you're already separated yourself from most other investors. If this has been useful, informative, then you know what to do. Smash the like button, subscribe for more, and maybe check out the video that's queuing up on the screen.